You have to assume that companies are not charities, and so they're not giving you money unless they think they're going to be earning it back.
You don't want pigs eating in your trough. And many of the relationships you have in finance, the snouts are in that trough.
We're trying to engage a whole generation. We don't want them to go off the other end. As with all investing, your capital is at risk. Ramin, how did you start investing?
I left investment banking and then I created a portfolio and I didn't really know what I was doing. For me, it was a baptism of fire. I just had to kind of work it out myself. It's always easier when it's not your money. If you approach it differently, your attitude to risk is different, whereas if it's money you've earned yourself, suddenly it becomes very real.
I started investing much too late. It was my third job in finance before I realized that the money I was earning was losing to inflation in my current account. And when I realized that I worked very, very hard for my money, but my money could also work for me. And I think it's something that many people realize much too late and leave a lot of opportunity on the table when they first start working. And so for me, when I first discovered that I should be investing, I didn't do much research. I didn't really know what to do with my money. So I just picked like the first ad on the tube for like a high fee, kind of passive product. Ended up paying more in fees over those years than I probably got in returns. And it was only when I started getting more professionally engaged in helping people invest that I realized actually you can pick between funds and that you could buy individual stocks and that, you know, if you believe in a certain direction for the market, you can put your money where your mouth is. But I think for me, what it also was interesting is I worked at Wise, and at Wise we were working very hard to gut all the costs out of international money transfer, because money transfer is like an email. It's not an old school process where people go run to a bank and move your money for you, and it's the same with stockbroking. It used to be this process where someone took a ticket to another person. Very labor intensive, therefore very expensive. But that investing right now is also just bits and bytes moving around, so it should effectively be free.
Some platforms encourage you to behave badly. So perhaps they encourage you to buy single stocks, and that's the kind of core of your portfolio. Or they encourage you to gamble because they incentivize the excitement of investing. Whereas I think what's different about Lightyear is it seems to be created and designed to encourage the good behavior. Long-term investing, keeping it diversified, regular investing. It's not about trying to channel your behavior to make the platform more profitable for the owners of the company.
We say we exist to create successful investors. And so it's a platform that was built from a problem that the founders experienced, where one, they tried to invest in the stock market and it was very expensive. And so they realized a lot of the money that they were supposed to earn in returns got eaten up by fees. And secondly, that was quite cumbersome, complicated, particularly complicated to make a good decision. And so at Lightyear, we are an investment platform, but that aims to offer low fees. And so that makes it possible that even if you don't have a huge amount to invest at any point in time, you can still benefit from the growth of the stock market rather than paying all those fees to a broker. And we want to make it as easy as possible for people to invest consistently over a long period of time. There's a value to doing it yourself, to being able to pick, to have a combination of, like for myself, a large portfolio of ETFs together with some of the things that I believe in. I think another way I like to describe it is what we're trying to do is we're trying to bridge the gap between the human and the capital market by making it this gap as small as possible. Firstly, by making the fees incredibly low. We do that by building software that integrates with the core components of capital markets and make sure that you have as direct access to the places where equities are traded, the places where equities are held through the software that we build. And at the same time, we make the experience for you, the friction for you to engage with that financial market as seamless as possible.
And presumably this is about building long-term relationships rather than some kind of transactional relationship, which is very short-term.
Of course. I think we see that customers join us and they stay with us. And that's our ambition. Your financial goals are not goals for 1 year or 2 years, right? For most people, it's about building financial freedom for the long term. And then you want to be with a company that looks out for you over the long term, that's transparent in the way it makes money, that grows with you over time. And we want lifelong relationships with our customers. Why did you partner with Lightyear?
Well, for me, I think it was about having a company that I could happily invest in myself. What you won't find me doing is saying, use this platform unless I'd be willing to use it myself. So what would constitute a platform where I'd be willing to do that? Well, I'd have to be happy that the fees aren't extortionate. So the fees have got to be reasonable. I do want this thin layer between me and the market. I always joke that it's like kind of having pigs eating in a trough. You don't want pigs eating in your trough. And many of the relationships you have in finance, the snouts are in that trough with you. So I want a small snout, not a big snout, eating my meal. So that's certainly aligned with my philosophy. Also the simplicity of the platform. A lot of platforms, they kind of like wannabe Bloomberg terminals where it looks really complex and it gives you too much information and the wrong information. That doesn't happen with Lightyear. The design is very clean, simple. It gives you the minimum information you need to make your decisions. So all of this stuff, I think, kind of aligns with my philosophy. Long-term investing, keep it simple. That's a really important rule. And very reasonable fees.
Makes sense. I love the analogy about pigs in a trough. So I think for us, right, that's also how we think about it. In the end, you only want software between you and the financial market, because software doesn't cost a lot of money to run, doesn't have expensive cars. So I think our missions are very aligned. So at Lightyear, we exist to create successful investors. And I think what you do is in a very thoughtful way educate your audience about how they can achieve their goals by investing in a sensible way. And we feel that that's a great use of our product. We do that by being very efficient and very data-driven in building software. But it really helps to have people like yourself educate people on how to use that platform to create the right outcome for themselves. And so I think it's a very good match of this thoughtful, also long-form content to customers with a financial product that makes it seamless and low cost. So what are some of the worst investing habits or mistakes that people made?
Oh my goodness, I speak to people daily about their investments, so I can tell you that I hear a very wide range of stories, but it ranges from people who take too much risk to too little risk. I think those are the two extremes. Too little risk would be people that put everything into a cash ISA and they just will get very bad returns once you adjust for inflation. It'll probably just beat inflation long term. And then at the same time, you've got people who buy single stocks, they've got leverage, they put everything into Bitcoin, or they put everything into gold. You get real extremes when you speak to people. So I think understanding risk, that's the biggest difference between someone who works in professional finance and your average investor. Really, it's about understanding what your goals are and then working back to the investments that you make. And I think that's where people go wrong. They say, oh, look, I should buy some stocks, some shares. I have a bit of this, a bit of that. They read a shares magazine. When in fact, what you should be doing is thinking, what do I want to do in my life? Where do I want to be when I'm 60? Do I want to be living on a council estate with nothing to eat? Or do I want to be someone who's able to have some luxuries in life? What's the plan? What's the goal? And then you can work back from that. And for me, strangely, my goals are fairly limited. The kind of things I enjoy would be things like walking my dog, going out into the woods. That's what makes me happy. It's not bling. It's not Ferraris or Lambos. It's really about simple things. So for me, my goals are fairly limited. Other people I speak to, they've got a house in Monaco, they've got a house in Dubai, they've got a very complex lifestyle, multiple households. So really it's a matter of working out what makes you happy and then engineering your portfolio to meet those goals. So a lot of what I do is talking to people about how to do that engineering. Work back from what you want to how you invest to get there. What are some of the worst investing mistakes which you see?
Not getting started. When you talk about either taking too little risk or too much, I think the first problem is just not engaging with the idea that you should be investing at all. I have a young kid. If I want to save for their university degree, that's going to be quite expensive. And there's a lot of stuff going on, student loans. I don't want them to have big student loans. If I put money in a cash ISA every year, consistently for 20 years, at the return that I would have gotten for the last 10 years, I have to put in twice as much as if I would have put it in the stock market and gotten the returns of the last 10 years. And so engaging with the fact that I should be putting my money into the investments in the first place, I think if you do that, you're already much ahead of the pack.
That's great that you invested for your child. Did it help you explaining how you went about it in order to get it clear in your own mind?
For sure. I'm so excited about, so there's this product that exists as a junior SIP, which I was thinking about, which is the most ridiculous product you could think about because you're investing for like a child that lives like decades into the future. It really puts into perspective the power of compounding, that if you put money into an account and you just let it ride for 60 years, and suddenly it becomes very obvious why having it in the market is so important. And I think the most powerful thing I can give him is once he starts engaging with money, that he sees that he has an account of which half of the money that's in there are just returns that were not his dad working, but it was the money like the market, the general economy working for his dad. Hopefully he doesn't waste that money.
I think when it comes to money, you've got to trust your counterparty. And I think a lot of that is to do with a relationship that you build over time. So you'll hear from your friends, I've started investing with this platform. You'll hear from family members, and then you'll have a go maybe, build up your positions over time. And then as time goes on, you probably build that trust. But it takes a long time, I think, before that happens. I think regulation's part of it as well. I mean, people always denigrate regulators, but I think in the UK, we've actually got pretty good regulation. And it's a huge pain in the backside, right? You know that working on a platform. I knew that working in an investment bank. But it's there to protect people. So I think it's a combination of those things.
I think in general, right, finance is just scary. And so every time you have to make a decision about the total of your wealth and you have to move it, that just feels very, very scary. But if you take that over a very long period of time, small differences in fees, small differences in the return can of course matter a lot, right? I think it's important to realize how big the long-term upside is of making a good decision. What is a CFD?
So this is essentially a gambling product. Now, you may lose 5 times, sometimes even 10 times as much when markets go down as you would for simply tracking the market. So while it feels exciting because there feels as if there's more upside, and there is more upside if you win, you don't think usually about the downside, which is you could get completely crushed. And that's, I think, the real risk that comes with these products. And you can tell if you're investing wrong, because if it's exciting, then it's not investing. So if you're kind of in a sweat thinking, oh, shall I put this trade on or not, then that's gambling. If you're thinking, oh, I've got to go and wash the dishes, I've got to put out the rubbish, and I'll buy some more of this index fund, that's what investing is. It's boring, and it should be boring.
They're illegal in many places in the world, and for good reason, because although they look a lot like a financial product, or they look a lot like an equity, they look a lot like an investment. They have many more of the characteristics of a gambling product. Like the same people that can offer a cash ISA can offer you a CFD product and even kind of lead you from one to the other inside the same experience. We don't offer them because if you buy them, you're more likely than not to lose money. And the FCA says that 80% of people that engage in CFD trading, they lose money. And so it's obviously a product that is not creating successful investors. I think the market as a whole would be much better if we drew a much clearer line between products that build wealth over time and products where either you make money or your broker. I think it's obvious that that's not a sensible way to invest. What do you think you should look for in an investment platform?
Having something which makes it very clear what I'm doing. There's almost a kind of vibe behind a platform. Is it a platform which is all about trying to get you to gamble? Or is it a platform that's trying to build your wealth, that's trying to encourage you to invest better? And you'll feel it pretty soon. If you're new to investing, I think you may not. But if you've used a couple of platforms, you pick up that vibe very quickly. So that's what I think really would make me decide whether to use a platform or not. So what do you think you should look for in a platform, given that you've created one?
Good question, yeah. I guess it's like, what do we think about when we build the platform? So, low fees, in the end, the main thing you can control when you invest are your fees. You can't control the ups and downs of the stock market, but you can control what you invest in, how much it costs you. At Lightyear, we try and build software that bridges the gap between you and the financial market with no one in between to eat your lunch. And that means we can keep the fees low, but also in a way that's sustainable, and we can keep on doing it forever, right? You want a platform that stays around forever. For us, I think, when you describe vibe, I think it's a lot about quality. So product quality you can see and you can sense, and the same seriousness that you see in the app that we take in the design and the experience and making sure onboarding is smooth, right? That also tells you about what's happening in other parts of the business. So that quality is a mark of trust. That means the platform's going to be around for a long term, which you want as an investor. That's the more general stuff. Are there any things that you particularly love about Lightyear and the Lightyear experience?
Oh yes. What I particularly like is the plans. And what's good about the plans feature is it combines two things. Firstly, it forces you to think really hard about which things to invest in, because if your money every month is going into that portfolio, you better like what it's going into, right? So you have to design what we call strategic long-term weights. And then the second part is a regular saving. It encourages you to think, yeah, if I put this much in every month, okay, the market might fall, but I'll buy at a better price. So I think combining those two things is pure genius. I love that. And it looks good, right? So I really like that feature.
Nice, yeah, that's a good one.
How about you? What's your favorite quality of life feature inside Lightyear?
One of my worst habits is news consumption, and you can read so much news about companies, so much like regurgitated stuff about companies, that I think what I find really awesome is the ability to listen to earnings calls from the CEOs of big companies on my cycle home from work, straight from the app. Even though you're overwhelmed with news about all the AI companies, all the big stuff, if you actually listen to the CEOs talk about their companies, you get a whole new, different level of insight.
And it's often quite spicy, isn't it, when the CEO is talking honestly about his company?
Yeah, but it also makes it so human.
Yeah.
It reminds you that investing is not, it looks like numbers on a screen, but in the end, it's numbers on a screen that are representing companies that have people in them that are working very hard every day for you to earn your return, right? For you to earn your dividend, for you to earn the return in yield, and so to bring it back to something that is personal. I used to be an employee at Wise, so I used to work a lot with the leadership team there. And so now, every now and again, when there's a Wise earnings call live, I'll listen to it on the way, and I kind of catch up with my friends to a certain degree. So I think, again, it makes me feel very close to a business that I used to know a lot about. It makes me feel a bit closer to the CEO. The founder, so I really like that. So another thing I love is a feature that one of our engineers built to solve his own problem, which was you see these charts, historical charts, and then you see it go up for a certain amount, and you're wondering, why is that peak here? And so he built this feature that analyzes the news around big spikes and big drops and gives you like actual good context, so that you can also learn, okay, what happened in the market, right? I see that an ETF tanked in 2001. What happened?
Yeah.
Actually, this is a pretty major financial event.
Yeah.
So you can build your knowledge about what happened in markets. It's ISA season, and I'm on the tube, and I see a lot of offers. Get £5,000, get £10,000. Why should you not always just take the biggest transfer offer?
It's interesting. I think it's a little bit like a relationship, because if you imagine you go to a party, you see someone across the room, would you do it for a short-term incentive? I think many people do and then live to regret it. So I think a relationship with a platform is kind of similar in the sense that, okay, short-term, there might be that cash incentive, but long-term, you've got to live with it. And I think that's just the same as it would be for a relationship with a human being. So I'd always be cautious about those cash incentives. Why are they offering you a cash incentive in the first place? If it's such a great platform, then people will be flocking to it anyway.
I think whenever there's a very big bonus, you have to assume that companies are not charities. And so they're not giving you money unless they think they're going to be earning it back. And so if you see very big incentives, 1%, 2%, 3% of the value.
That's a good point.
Then that means that they expect to earn that money back in other ways. And so I think for me personally, I want to make sure that I'm in a place where I can just leave my money, forget about it, and know that it's doing the right thing over an extended period of time, and work with a company that works hard for me when I'm a client, not works extremely hard for me before I'm a client and then takes my money cheekily. So I think it's all about being sensible. It's all about understanding the fees of the platforms and making sure that you pick one that is best for you in the long term, not just at the start. One way at Lightyear we try to make it very easy to understand that is we built this fee comparison tool, which is this beautiful illustration that shows you, depending on the way you invest, depending on the money you put in, the fees you can expect to pay over time. Because these fees, they compound not just this year, right, when that transfer incentive hits, but they compound over the very long run. And so it's important to make sure your money is a place where it's working for you and not for your broker over decades rather than just this year. We talked about CFDs. What would you like to see happen with that part of the industry?
I've got no love for CFDs. So I think if the US has banned them, I can't see a real need for them in the UK. So I'd say ban them.
If I was the regulator right now, I think the starting point is to draw a very clear line between the part of the industry that is investing and the part of the industry that is clearly not. And to make it impossible to have one app or one product or one brand that sells both at the same time to customers. I think the risk there is too big. We're trying to engage a whole generation of Brits to invest. We don't want them to go off the other end. So I think I'd start there. Ramin, thank you so much for talking with me. It was very enlightening to hear you speak.
Yeah, I really enjoyed it, and thank you for inviting me here. That's been great fun talking to you.